Aloha and welcome to Java. Thank you kindly for joining me. It is Friday, August 2nd, 2024. I kind of jumped ahead on that deadline and I totally skipped yesterday on the 1st. So I put a video out, but I had the wrong date on it. So thank you so much for catching that, the accountant, and keeping me straight with that. At any rate, we've got quite a bit to go over today as far as the markets. It's getting interesting. So moving on with our relative risk indicator. Huge drop. Stocks dropped yesterday and went full into the fear zone. So it dropped all the way down to 33 on the fear and greed. And then the MMRI is down below 260, is 255.1. So quite a bit happened. More notably, the 10-year yield is below 4% now, 3.94. Dollar strength is also weakening. So this should allow more as far as movement. However, we've got some other things playing in this market. This might have been a little bit more than just a correction. Right now, it just hit correction territory. Now, with this, we've still got cryptocurrency dropped slightly, still above 64,000. So that 58 level may not come into play because it's being seen also as a safe haven along with gold, which we'll bring up in just a bit. So right now, we had stocks dropped quite a bit. We've got the volatility index is up, as well as gold and oil. Now, gold above 2,500. So this is quite remarkable. It's looking pretty bullish, but now hitting those levels. We've got the futures also saying there is more downside coming. So short note is when you buy the dips, don't buy, don't try to catch falling knives, is this saying. And basically, what you want to do is you want to wait until they bounce. Wait until you see a green candle. That sets a floor, shows there's some buyers there. You want a little confirmation of that, so wait till they hit the floor. So we've got a completely different setup this morning, and a lot of people saying that stocks don't just go up. A little bit of nervousness coming into play. We're getting job numbers prior to the market open. So we've got the Federal Reserve's mandate number 2 coming into play when they're watching these numbers and reports. So the first one is price stability, which is what they've been speaking about with inflation. Second one is employment. So we've been watching skewed numbers for some time, and we're going to get more reports prior to market open this morning. I'll talk about that in a moment. First, I want to talk about the Japanese yen and Japan stocks tumbling, largest two-day rout since prior to the pandemic, basically 2011. And this is probably the largest now since 1987, I believe it was, when the stock market for them crashed. So we've got a bit of a rotation here. And I want to open up that back end that nobody's thinking about. And when you ask, well, what has the Japanese stock market got to do with me? Well, everything financially. So we've got South Korea's inflation picking up, and they are talking about their rate cut outlook. If inflation gets out of hand, they cannot cut rates. So we're watching a shift. And why is this happening? It's because it's basically a pressure relief valve. I suspect very strongly that if this continues and with what's going on, there may be a bit of quiet dealing going on, if you will, in the background between the Japanese yen. Why would they do this? I'm going to take a moment here because they are the largest holders of US treasuries. So we have seen recently other currencies fall, other currencies fail, namely Lebanon, Venezuela, and a few others. However, the Japanese yen is the first strongly tied Western currency that would take a fall. So I think they're basically using South Korea as a buffer for this. Since this issue is rising with the Japanese yen, they could dump a lot of US debt in order to keep themselves afloat. So they've already been warned about being a currency manipulator, but there is a lot on that backside as well. Basically, right now, United States cannot afford to let them go into their currency failure quite yet, so they're buffering it out. Okay, calendar and earnings. Prior to the market open, we've got employment reports and then also wages. Now, these numbers have been skewed a long time because the numbers they're counting are not taking into consideration really when the market reacts to these two things. Number one, full versus part time jobs. Number two, government, public sector versus private sector jobs. So these come out after the major market moves, but we've got to watch those as well. So saying there's cracks forming in the US jobs market is putting it very lightly, in my opinion. So prior to market open, we've got large oil reporting and sundial. So those will make their move in large oil. We've also got the war going on affecting oil as well. It's positive at the moment. We've got gold hitting fresh record high, over 2,500 per ounce. This is fear trade going on. So we are watching some fear now, which has shifted from simply a drop because it's getting a little bit tired. So we've got the jobs really under watch. We've been talking about employment really being the indicator, and there are stories now about it's going to get more difficult for particular workers to find jobs. So basically, first time job hunters. We've watched this ahead of time in China with the younger generation basically not finding employment out of their university as soon as they graduate college. So we've also got Intel laying off 15% of its staff. It's significant in order to cut costs. We've been talking about this for a while. Many companies either closing out and then the employees lose their jobs or directly laying off in order to cut costs. Amazon was another one that has done this of late, as well as several other large companies. Now, Intel has been a chip company for a very long time, so this is just kind of sympathy play hitting the others. So, new signs of weakening the economy, heightening concerns about the interest rates. So they've already set it up that they're going to do a rate cut in September. However, the fly in the ointment is the whole election selection cycle and what they're doing with that. So if they put this off, they could extend this by some extraordinary measure till beyond that event. So right now, as it's looking, markets pricing in that they will be doing cuts as far as September at least September, and still actually the market is still pricing in 3 rate cuts this year somehow, which would mean they would have to cut like every time they meet, and I just don't see that happening. Okay, so they're talking about the Fed preparing the punch bowl. They mean that with this inflation and unemployment numbers, they are getting ready to do these cuts. So yesterday, chip stocks starring another bloodbath as Intel dropped, Nvidia dropped, ASML crumbled. So more chip sectors, and at the same time, there is also a new deal that they have given to Japan, basically for a new chip company on the microchips that China is now daisy chaining, basically. So trying to prop up Japan in a couple of ways. So moving forward, over in Europe, we've got Dutch MPs sounding the alarm over surging imports on Russian gas. They are expecting a significant winter, and this is their main source. So basically, higher prices, and what is that going to do? More inflation. So a short note about them cutting rates. When they cut rates, if the US cuts rates, that's when the pain begins. So markets could go up, but that is typically when the real deep part of the recession, which we are already in, will begin. So, with all of this happy news, we've got the Irish Finance Minister signing for a new sovereign wealth fund. So, this is a new player in big money, basically. So, They have pretty large potential according to them, and they're talking about the budget surplus to be used to protect against future downturns. Now, this is typical. Government is not supposed to have a surplus. They are supposed to run lean, but typical of all of them, then they want to take this money and put it other ways. It never goes back to the people or lowers the taxes. So they're just following suit. So with this, I've got one other thing that has been all around the news. It's everywhere. I'm sure you have seen this. And it's about in the Olympics, the boxing match. And this is supposed to be women's sports, but because this, I don't want to call him a man because he's not really a man, this male uh, beat her significantly, and they're having some serious issues with this. I just outside of this opinion, why call it women's sports if it's not just call it boxing and open it up? At least let's be honest about it. But all of this going on, let me know your opinion on that in the comments, because I find that a bit maddening that something that actually is possibly one of the most significant physical differences between men and women in a sport, and this is being allowed. So with this was a story from earlier. The Hamas chief assassinated. However, there are now claims that they have also assassinated the number two, and it's all about the narrative. Blame Iran, blame Iran. Now they are saying that they're going to attack in a moment. We'll watch a surge in oil again if this happens, and it could be another excuse if becomes escalating that into the war. It could be something that could put these other things off. So, with that, just be prepared for anything. It's been very interesting of late, and I want to wish you all a great weekend. It is Friday, so until I see you again, my friends, stay free.